Wake up, goddammit. Welcome to MARKETcast with Monk and Unk. Morning, P. How's your week?
Just really good. I try. It was up and down on a lot of stocks, but look at some of the stuff that we were able to hit on. Gold was silver on autopilot. Really caught a nice move down on end phase, and then on the upside, Apple, Google went according to plan. Did not get in on Microsoft. That one was good too, but just happened how I thought the week would be shaky in some ways, but if you look at SPY, completely they propped that up with Apple and Microsoft as everything with the banking and energy, kind of went down. Oil struggled more than I anticipated and had that big breakdown, so I'm really interested in following that going forward. Did okay on oil trades. I just traded Oxy off some levels, but nothing sustained as of yet. So yeah, really interesting week. More Fed stuff ahead this week, so expect a lot of volatility.
Yeah, I was definitely a little cautious beginning of the week. I I don't know when I said it, but man, we could have just retired off crypto if we would have played the first read on. Uh,
Yeah, yeah,
those are really good, but I think my best entry on Mara was like 580, and I would have just been fine holding it all week, but I wasn't hanging out, especially through the Monday, Tuesday, Wednesday numbers. Just didn't
yeah.
really have a lot of clarity. But when we got around that, definitely just a lot of stuff that had, I don't want to call it low volume melt up, but just relief. It felt more like just relief. Um, Spent a little bit too much time trying to get free shares on CS. Um, I think I flushed like around 6K Wednesday, um, and got like 20 free shares. It
Yeah.
just didn't want to move. But I did good on the dip, the really big dip day on that. I think I'm up to 350 on free shares on that, right around there. Um, Other than that, it was basically, yeah, just um, small times in trades last week. More like a death by a thousand arrows than trying to swing anything. Just didn't have that. I guess I don't know. When oil's down and the banking's having a problem, that does feel to me like the world's ending, because those two normally aren't. They don't do that together. Usually,
Right.
oil's a
Yeah.
product of people being out, or some world event, and it's just like it was melting down. This and it,
Right. Yeah. Oil prices, they had been in a really stable range for a while, and I had thought that it would break out to the upside, and then it broke out of that down. Yeah, with crypto, I caught MSTR, but really it was like the tail end of its move this week, and even that it was like 12%.
yeah.
But I mean, it was below 200 the end of last week, and is up over 275 after hours. So just good example of why I stay on that one. For a stock of that price, those moves are crazy.
Yeah, in the right
So
environment, anything is tradable, and I think that's why we stress in general, just have a list that you trust,
yeah,
and diversify that list. That way, you have a little bit of every sector. Because if you trust the list and you have a gold stock, you'll probably do okay if that's moving. If you trust the list and you have an oil stock, same thing. Crypto, you can just run it down the board, in that regard. I was surprised the oil as well on the number, because we had talked a few weeks back and I asked you where your like we're in trouble line was, and we definitely crossed that there for a day and a half.
yeah, yep,
Um, where do you see that? Do you see that coming
yeah, and that
back,
and
or?
that's just I do think though that it's one of those things like if you cross it quickly and then bounce back from it, it's probably better than like slowly bleeding out underneath the line and just staying there. So I think it still could, we could see some recovery on it, but but yeah, I mean, you don't really want to see oil in like the mid 60s if you're thinking anything bullish on it. But along those same lines, and we'll talk about this when we get to those tickers, but they still haven't really been able to get Exxon under 100, which is sort of interesting with oil sitting at 66. If you look at what Exxon was priced the last time oil was at 66,
Hmm.
that's a big divergence. So some of the stocks have held up pretty well compared to the price of crude.
Yeah, I thought there's a lot of lines that I want to say probably this time last year, maybe April even, when I figured out, all right, Professor is onto something with oil. It's more than just oxy. Um,
Yeah,
I charted a ton of lines like, all right, well, these probably won't come back, but if they do, this will be the spot to buy them in because it's a pivot. But we were talking some of them 100% from that line or 40% up from that line after a 150% move. But we're back there now. We are back there, and I think XOM is definitely one of them that we are back there on. Like my Oxy line, I never thought was coming back, and we're there um, right now. So kind of
yeah,
just
right, exactly.
go.
So MRO, I started trading MRO. I think it was like $9. That's not going to happen, but it is back at this like 2183 is a line I have on it. So
Oh man,
um,
2161.
yeah,
And I put that on like again in April when
yeah,
yeah, but it was again what, $14 first of the year. You probably found it at 18. By the time I charted it, it
mhm,
was 24.
yeah,
You know, so but getting that offered again on all those is interesting. Especially since it's like year two um, for you on these, right? I'm sure that that's a different feeling for you, right? Like I played the original move on these stocks.
yeah, yeah, for sure. And this is I think something that to get used to as a trader that it looks bad right now, but you have to get yourself about buying when it looks bad. Now that doesn't mean that you just are going to buy something that's just collapsing. But these also, I mean, these aren't like growth stocks. This isn't purple or toast or something
Mm-hmm.
where it gets underwater and there's really no bottom to it. I mean, there is strength at these levels. There's a lot of geopolitical realities that are likely going to turn oil around. Still, the flow setup is still there in a lot of exploration stocks and things like that. So I think this is to me a temporary dip. Doesn't mean it's just going to turn right back around, but that's why you don't trade weeklies on some of these. You have a plan for shares, you have a plan for monthlies, leaps, etc. You make the strike plausible, and you go with your plan. So that's kind of that's where I'm at with
Yeah,
oil.
it's funny that the way you say things, like I'm looking, I don't want to say like suit and tie and teacher, but that's how it comes across to a guy like me. You know,
Yeah,
it's very professional. Like we're gonna OPEC reports on the third and the you know all this stuff. For me, summer's coming. These charts look
yeah,
like they're in a great spot. That's it. It's you need oil in
yeah,
summer. People want to get out there and do stuff, and that's always been my thesis. But it's good that those two kind of meld really. They're just different perspectives that come to the same view. Um,
yeah.
I like that a lot. Let's um let's get a little bit into that
Oh, and
break.
on that note, I like when I was watching your video. One of the things I like is like you'll like a chart, and then you'll double check is this a gold or silver play.
Yeah,
And I actually like that. Like I 100% know the flow on it that this is gold, this is silver. But I like that the chart has strength with even without the context of what the sector is doing. That because that to me is a good sign. Because if your chart is in good shape, the flow lines up, and the sector's there. Like all three of that's when our highest percentage plays come together when all three of those things match up.
yeah. And then as a trader, you just got to learn to time a really good entry, um, and that can be multiple. I said it in the video I kind of put out for the new people in the room, so they knew what we were getting into. Like the price doesn't matter as a day trader. It's about the risk and the range. That's
Yeah.
all that matters. I mean, Mara's a great example. I bought Mara in the fives, sixes, and sevens this week. Um, but the range was there, so it was playable on that level on the day every day. I mean, the last one was at 702. Three or four of us got in off of that. Um, Kind of to jump back to
Yeah, exactly.
what you were saying about
Right. Yeah.
the right opportunity is I said that also in chat. Like a red candle is a day trader's best friend. Not every red candle, but in a proper situation, that's what you're looking for is that red candle. It's going to be red when you buy. It's going to be testing your level, but you're going to see strength whether you read level two or however you trade. Just with the ladder or anything like
And
you if you
oh,
wait for
absolutely.
a
Yeah.
green candle, you're waiting for the bad entry.
Well, I mean, before I really started adding TA into things, I was kind of just a flow trader, and I would just know, okay, this stock has bullish going into the day. If it flushes it open, that's when I'm going to enter. And I did well doing that. I
Hmm.
didn't do as well as I do now because I have specific levels to it, and a better understanding of um, the volume profiles and supply and demand and all that. But yeah, I mean that was basically the idea that I want to buy a bullish setup when it flushes, when it pulls back. And with our gold and silver right now, it'd be easy for me to just tell anybody, well, you should have just bought when we said it, and you're up 100% on your gold leaps. But even so, there still are entries for these. Um, the whales end of the day, they're still adding, they're rolling further out of the money, and those gold and silver in particular, they can hit an uptrend and just grind up. We saw that long time ago with AUY. It's just like,
Yeah.
and it did even better than gold. It didn't have the dips that gold did, but it just had this steady climb for like 6 weeks or something. So they can do that, and we might be entering one of those moments again, I think.
Yeah, that's the tough thing about gold stocks for me is they are. I'm gonna even put them on a C, as far as eyes from the market. Right? They're not Apple, Tesla, all those guys. They're A stocks. There's a lot of eyes on them.
Yeah.
The gold stuff, like the day traders don't even know. Most of them don't know about them, and there's very few, people that aren't probably of a certain age that even look at those kind of stocks. So when the moves happen, they usually happen off of a news or all at once. Um, so they're harder to catch. Like I said that about gold, the actual gold stock. Um, that
Hmm.
15 to 17 channel is real hard for me to play because it's slow and it's not that much range. This week it proved me wrong. I think we closed at like 18 on that thing, and it had a couple like power moves. Like 2 days it took. It didn't take a week. Um, so those are hard for me to
Uh,
read, but they're safer. They're super,
yeah.
super, super safe. Um,
Well, they're hard for me to time because if I could time them, I'd be in weeklies and go up 1,000% on weekly contracts. But I don't try to do that. I buy June or January, and I just let it sit there. And the thing is, like, I'm not going to say, if people ask me like, "Where's your stop? Where's your stop?" My stop isn't actually on those based on the price of the contract. It's the setup of the underlying. If if that setup falls apart, then it's not really worth it for me to stay in those contracts because we have to, recover the setup, and I don't really want to mess with that. So that's what I base that on. And the position's small enough that that might be, 20% lost on the contract. It might even be 40%, just depending on if it has like a really bad day. But I'm willing to take that risk because the upside is so good. And then here we are, they're up 100%, and then I just decide what to do from there.
do you manage stops, or do you kind of pick a spot and maybe clear out a couple contracts and just pick a spot and let it go? Because I know those move different.
Yeah, so it depends on the spread. So if you set a stop like with your broker and set it at like 60 days or something like that, they might fill that stop at the bid price, which is not what you want, because you're going to get it's going to be a lower fill than if you manually get out of it. So I it takes discipline, but I mean, I just have a just that ability to just cut something cut something loose. And for me, it's more about the underlying price of the stock than it is the option contract, because a minute candle can shake you out of an option sometimes, especially if it's short expiration. But I'm just looking at that setup to hold together. So I'll give a quick example. So QQQ, I mentioned it in the room that I was going to play calls up 304, and so I bought a call when it hit 304. It had one candle that dipped to like 303.40 or whatever, which isn't that much, but that was short expiration, so it actually took the premium down a bit, bounced back within 30 seconds, and was
Yeah.
and was gone. I wouldn't want to have a stop on that, but I do think a trader needs one. If you get that kind of paralysis where you're just watching something fall, or you're afraid to look at something you bought, that's a bad sign as an options trader. And it's more probably more common than people think, that you're just gonna lose on something and then hope it comes back, and then the 20% loss becomes an 80% loss. So for me, the mental stops and just manually getting out just works much better, but only as a mechanic of how they fill those. It's not as precise as it is with shares. So that's why I do it like that.
Yeah, that happened to me on that rig option I had. I only had two of them. Got
Mm,
23 cents. Went to like 60. I got out. You know me. I'm paper handy over here. I got out at 50. But I kept one and then stop lost at my original entry, which was 23 cents. It did
yep.
not. It did not. It failed at like 18. So
Yep.
that stop loss at entry didn't give me my money back at entry. Luckily, I was up on the first contract, so it worked out. I mean, but I could have done way better. Um,
Yeah, and imagine if you had 20 of those
yeah,
and it did that on you. I mean, that yeah, that's just not no good. So yeah, so I and sometimes when you get out, you have to do it a couple times. Like you're trying to get that mid price,
yep,
and it won't fill, and then you'll just kind of keep at it. But it's one of the reasons that it's better to sell calls while the stock's going up, and it's better to sell puts while it's going down, rather than wait for it to reverse and try to get out. You'll end up losing 20, 50, $100 just trying to get out. So that's why, like, people talk about the minute chart. I use the minute chart to get out, not to get in. And I can see when a setup is weakening. I can see that the RSI is up at 80, and I'll just call it good. A lot of these positions that I'm up 200, 300% or something, how greedy do you have to be to say, like, oh, I want 500 or 1,000? Just get out. Just get out and go on to the next one. So
yeah,
especially that short expiration stuff.
you have to believe it's repeatable for sure. For on
Yeah.
on the share side, um, for me it all comes back to your rules, and I don't really. That's why I don't like telling people how to manage their stops. Everyone knows I'm a 3-to-1 ratio guy. It's pretty simple. My daily dollar amount is also 3-to-1. Like I don't want to lose. I'll just say it because it's easier for me to explain. I don't want to lose more than $300 on the day. Like that's just when you cut it out. So I manage my stop losses kind of off that, and my positions kind of off that. Like so when I enter, so let's just throw something like at $5. Whether I have 100 shares or 1,000 shares, the stop loss is going to be different. Like where I put that stop because I have a more financial range, right? But I also look
Yeah.
at that before I enter the trade and make the plan on how I'm going to enter this setup and with what I'm going to enter this setup. But it's management after I buy, and that becomes that to me that is trading, right? If trading's not getting in a stock, like I got a stock and I'm holding it, I'm a trader. For me, it's getting in that stock, having a stop loss where I don't lose my account, then moving that stop loss to where I don't lose money, and then moving that stop loss to where I don't lose money that I made. And that's it.
Yeah.
That right there is why I'm successful. I'm a day trader, so I need to do that on the day, and I look for levels. You still get flushed out. I think it happened to me Friday on Mara. I had a great entry, and it was consolidating, and I just put my stop too close to the consolidation. One candle came down, and it just took what I had, which is fine. It was in the green, but I could have probably, I think I could have doubled that day if it just wouldn't have flushed me out, right? Because I'll just keep moving my stop up. But you got to have a plan of attack and not just a hope and hold. We're not throwing grenades here. We're taking sniper shots. That's kind of how I look at it.
Uh, oh yeah, yeah. And so two things on that. I mean, one, so you get to that if you have that day where you lose $300 and it's not even noon, you just walk away.
Yeah, yeah. What do you mean when noon?
That I,
Noon, it doesn't take that long for me to have a bad day.
right?
What are we
But
counting?
yeah, I think
Were you counting for the time change? Noon on the East Coast.
yeah, I
Yeah,
think
yeah, no, you got
that's a
to.
really important point though, because here's what happens with a lot of traders, especially options traders. If you have a bad morning, it's like there's still all this trading left. I'm going to move over to SPY now. I'm going to make it back, and that becomes your motivation for entering a trade, which is the worst motivation that you can have. I think it's fine if you have a couple losses and then it's like I'm looking for setups, but those setups you're looking for had better be the same ones you were looking for before you had those losses. You cannot let the psychology of that get into you, because chances are I just see it all the time. There's going to be something better the next day, and just save your money for that. So don't feel like you have to make money every day. I think
Yeah,
that's a um, big key psychologically to this.
I'm a, I'm a
And
big.
and
Go ahead, go ahead.
and then the other thing is, if you're in the short expiration stuff, this is a part of options trading that some practice and getting used to and stuff. But if you're in a short expiration contract and it's up significantly, it's better to just roll it to the next week or several weeks down the line, and then you could to stay in it that way instead of trying to stay in the short expiration one. I was up. I entered at like 180 on an end phase put overnight. Ended up, zero DTE the next day. It was up $500. It ended up going to $1,500, but you're talking about a zero DTE contract into the afternoon, not a place you want to be. So it was better, even though you're going to make less profit on it, to just go ahead and roll that, and you can stay in that way. So letting your winners run in options doesn't always mean holding the specific contract that you had. And look up the word roll and anything POC says about it, and you'll start to learn how that works.
Yeah, me. I'm kind of a big sports guy, and I'm definitely the more of the psychological TA guy around here. I mean, let's be honest, a lot of these guys are option traders. But the way I
Mm-hmm.
look at that daily like that is boxing, right? Like this is a heavyweight fight. We're fighting in here. So if I get knocked out, I'm not just gonna jump back up on my feet and try to beat the guy up again. Especially when
Yeah.
I have the luxury of getting out of the ring, learning something new, taking my time, looking for a new plan, and starting over. You have that luxury that this market will be open tomorrow. You don't have to have it today, and I'm definitely a revenge trader. I will try to beat the same stock, but if I take the rest of the day off, it's just been successful for me to come back, say, all right, yeah, you are dumb, and try something. Try an opponent that you know better. Play something that you know a little better the next day, just to kind of get that first green trade back on the right side. But no, if you sit there and try to fight the same guy the whole day, it's obviously either you're not seeing conditions right, you didn't see the trade right, especially if it turns around, right? You just get a bad entry, you lose some money, and it turns around. Like
Yeah.
it's all in your head. So I don't know many people that can
And
just blindly go through, you know, whatever your bottom is on the day, where it triggers your emotions like, crap, I just lost this much money. and still perform well. I don't know. I can't think of anyone that can do that.
Yeah, no, absolutely. And there's things that happen during the day that you can't predict and that are going to change things. Some Fed guy makes some comment and says a word that the market reacts to, and your inputs when he says the word pivot, and all of a sudden it just wrecks everything. I mean that yeah, that happens too. And for me, where if I have a bad morning, um, slow way down, and then it's that process of studying these options that's going to make me a lot more money later than trying to snipe, you know, 0.5% moves on SPY. So that and that it takes failing at that a few times for you to kind of um, finally get that. And for me personally, it's so much better to trade my work and my process than to sit here and just try to snipe price action intraday. I can do it, but it's just the payoff's so much better, and my time's better spent just digging into the flow, and coming back at them later.
Yeah, I think that's kind of what I personally, as a trader, value with us in the room. Um, I don't have either end anymore. I'm going to use Lucid and Clove. So like, I don't have like those super huge winners anymore because I'm not hanging out. Clove was dang near, excuse me, Lucid was dang near 40K for me. So like, that was a huge trade. Um, but
Yeah.
I hung out in it. But I also don't have those $7,000 losses like Clove, where I do kind of get mentally stuck into something. I I double down on it because I believe in myself, and then I do take an L. It doesn't happen all the time, but those two things were definitely in my thing. But it's because the work we do, I just feel I can fill my cup now. Like no matter what, I feel the work that we put in, I'll be able to day trade and fill my cup every day. I don't have to really have a long plan on them. Um, and I think a lot of people just get caught in that. Like, I need this all because I can't find another tree with fruit on it, or this tree is going to have the best fruit on it. And you have to really believe, especially if you're in here, that these guys are always going to find something. So if I just take my 20, 30% while I'm learning, eventually I'll take 50 to 100% when I know what the hell I'm doing. But the main point is I can do this every single day. There will always be something to trade. And that really
Yes.
changed my game working with you, because I used to be like, this is the one for the year. And I don't do that anymore. I just don't, especially in this market or the last year. Um, I don't have to do that anymore. I am kind of doing that with CS, but I'm doing it for free because I can trade it every day right now. It feels like I can get a little piece of it every day. And those, again, death by 1,000 arrows right now instead of trying to shoot a cannonball has really where my game has changed as a trader in our room.
Yeah, absolutely. And I think end phase is a really good example for me where I've taken this thing huge moves both directions. Well, now it broke down to where I thought it would, the 180s, and it's like I'm not. I got to back off for a minute. I can't hit that like I have been because it the thesis played out. So now it's time for a new one, and that takes some time to take shape. That isn't like the Friday buyers aren't going to tell me we're turning around here or we're going to break down further. So I have to step away from the big winner and then sort of focus on some of the other things that I trade. Coin, I had to back off coin. I had the downside trade. It got into the 30s, and I was like, I can't short it down here, but I also don't see it turning around yet. And there, it stayed down there for like 3 weeks or something like that, and then, and then turned around. So yeah, and that's why I follow all these sectors. That's why I follow so many stocks. I do always have something that I can jump into. So that is definitely what I look for.
Awesome, awesome. We're getting a little thick in time here, so let's
Yeah,
cover some
yeah,
stuff with this week. No, I love the EDU,
yep.
and I think we should definitely stay on that. But let's go SPY first. Just because I won.
Yeah. The perma bear.
Yeah, we weren't super far off last week, but we had 380 on the low and 396 on the high. 381, 395 unks lines. You were a little lower with 392, 377. But I'm gonna take the dub because I was basically a dollar off on both sides. How did you feel? I felt they were holding it up. Um, you said Apple earlier. Um,
Yeah. So and it happened to coincide with that 3,800 level in SPX, and we tested that. Didn't even get all the way to it. I think 3,809 was was the bottom, and then Apple took off and kind of held things up from there. So they really were not wanting it to fall below that level. And I always have kind of a cynical side to these moves that um, moves up can help give them more room down. So as we enter a week like this, I think that this gives us a little bit of potential for momentum to get that break of that 380 level in SPY. So I think there are some factors this week that could send it there. We're also at I think there's uncertainty with how the market's going to react to. It's not as simple as it used to be with inflation or rate hikes.
sure.
That inflation's bad, the market's going to go down. They're going to hike rates, it's going to go down. It's more about what they say
Yes.
afterwards that seems to move things.
Yeah, real quick on the
Um,
just the dates. The Feds are Monday to, or excuse me, Tuesday, Wednesday on the Feds. We get that decision. Friday's PMI, and then you have UK and Japan inflation. I think Tuesday, Wednesday as well. Um, I noticed on the UK thing with the banks, it's 11 o'clock my time when the European markets closed, but there was a rotation. There was a road like they all came. There's some degenerates with a cell phone in Europe that trade our market, and you've seen it. I believe it was Wednesday. Um, it's a good thing to know, have in your back pocket, especially when they have news on that side of the pond, as they call it.
yeah,
Because they
no, for sure.
for some reason they just, if they make money over there, they're like, hey, let's go trade in America. Like they take their profits to the other casino. It seems like, and you just get an artificial spike a lot of times at that time. It's but the banking day news was one of the biggest ones I've seen since I've noticed that. Um, I'm back on the same thing this week. Like
Yeah.
you're gonna kind of have to tiptoe until you hear what they say. 100% with you. What they say is more important than what they do. Um, but going to be very interesting in that regard. But it's going to create a ton of volatility again. I don't see how it can't. They're not clear, is why.
Yes, and you're just going to see some dramatic moves in those banking stocks. And again, look at the implied volatility. Those ones over 500% are just not worth it. It's I mean, you need like a 15% move to make anything, and even though that is going to happen, it's easy to end up on the wrong side or in a. As far as entries go, who the hell knows? I mean, those charts are so broken right now.
Yes.
But
Yeah. You're getting relief range of 100% on some of those charts. That FRC one, I think it was.
yeah, so if you want to short or go long, just Wells Fargo or something like that. I mean that's perfectly fine. Still kind of not my thing, just
Sure.
because they're just so volatile. But I'll give you some numbers on SPY. Kind of my
Let's do
thoughts
that.
here.
Let's do that.
Uh, so I don't know that there's a lot of um, room for upside. I think we're going to fall short of the 400 test. So I'm going to say 396 is going to be my top on it, and then for the bottom, I don't know that this will be especially um, sustained as a move down, but I got 375 as my low this week.
375. Let me look at my handy dandy chart here real quick because my spy numbers are off TA here. I'm gonna go 403. I think we do. Is that what that one is here? Yeah, I'm gonna go 403. I think we do. I think someone's gonna be hopeful with what they say this week. I do think. Well, let me give me a bottom number before I say that. Um, that's too much range. I know I'm gonna stick with where I was at last week. That 381. Um,
Nice. I
we
like that
see
we're
them.
different this week.
Yeah, we've seen them hold. Well, we've seen them hold up the market the last 2 weeks, right? It was 400 the week before. It
Yeah.
was at 395 this week. So kind of sticking with that. Um, I think we're going 25, and the majority of the people will not listen to what the Fed says, and they're just going to come back because it's going to look like we're finally pivoting. Um, I don't think we're getting 50, and then that's just where I'm at. Are you on the same page there, or are you 25 with a
Oh,
hawk, or 25 with a
uh
dove, or
right. Well, I think 50's off the table because of
okay?
the planes flying into Omaha and begging Warren Buffett to save the regional banks. And I mean, I just think there's too much.
Is zero off the table?
Um,
Is pause off the table?
no, I don't think so. I think 25 is most likely, like, by far. Then I
Yes.
would say after that pause, and then the least likely is 50. Um,
If they
if they
pause
if
and
they
still are hawkish, I don't think the market takes it as hawkish.
right,
Like that, I
yes,
think that would really get things moving. 20, I'm with you on 20. It's going to be 25. I don't want to guarantee it, but and then, like we said earlier, it's about what they say.
yeah, and just um, if you're trading, I actually I don't oppose lotto positions during him talking, but I don't know what people's account sizes are, but if you know, don't do $500, do like 75, and you might double or triple it, but it might go to 25. It's like you just have to be, you're playing basically like penny stock candles on a hundred multi-$100 billion ETF. So just be aware of what you're doing, and what you're getting into with that. But
On the
it's
lot
I,
on the
I mean it's
lotto tip, like do not blow. You can blow up a day with the lotto. Don't blow up a week. Definitely don't blow up your month, and do not blow up your
yeah,
account. But if you got some money on the
exactly.
day, you can blow that up. If you made 75, $80 in the morning, go ahead lotto that, and that's how you should look at it. Protect your neck. If you're down, don't lotto on the day. You didn't earn that lotto ticket, and that's a
Exactly.
that's a
Yeah.
rule everyone should have, especially option guys,
Yep.
small account option guys. Like, don't ruin your week. If you want to ruin your day, go for it. Go for it, but don't ruin your week. Definitely don't ruin your month, and don't ruin your account. Um, and,
Yeah.
and and that should be your parameters. If you need to know how much to trade, how much to put in a trade, that's it. That's it right there. Keep it simple on that regard.
100%. Yep.
Do you want to get into bank oil materials, or just save that for the next part?
Well, we have plenty of stocks in those. So yeah, we can save that for the next part. A
Perfect.
quick note on QQQ and where it lines up with this. There is a widening divergence in SPY and QQQ right now, because the stocks in QQQ, I mean, go look them up. That's where people want to be right now. They want to be in tech. They
Mm-hmm.
don't want to be in oil, banks, etc. That's the stuff that's dragging SPY behind. So in your chart comparison, these numbers used to be lined up, and the charts used to be lined up more than they are now. That divergence is going to resolve itself one
Yes.
way or the other. So that's something to be aware of with both of them. And it very well could be that SPY catches up to QQQ. It doesn't have to be that the Qs go down. And then the other thing with the Qs, my most reliable level over the past however many weeks, is this 304. So you can still trade off that this week. And if it breaks down below 304 and stays there for a bit, it's been tough for it to come back. And then same thing, if it stays above it, the bounces have been really, really nice off of it too. So if I'm in an ETF, that'll be the one, just because it's sitting right at my level. And I don't trade it every day, but I do, when the opportunity's there, and I think we're at that moment on it.
Yeah, well, that's one of my better skills that I don't think people utilize or try to learn. But and I talk about it in here all the time. I can tell you exactly what's going on after it happens. I
Mhm.
review it that way. I want to know so if that happens again, I have knowledge of it. And I think I don't know if I said it in this session last week, but I definitely said it Monday or Tuesday in chat. Um, because it's happened 5 times in a row now. We're just preloading the Fed event. People go to those tech and growth stocks. That's what they want to be in when
Yep.
we turn around. We're seeing that. We're totally seeing that right now again for the fifth time. So if we get it for a sixth or seventh time, be ready to trade it. It's a week early. We went with a 4 weeks, 4 to 6 weeks sideway or down. The seventh week, which was last week, was them just kind of, well, they probably were doing it weeks 5 and 6 too, but you could really see like they're preparing themselves for the Fed event. They're gambling on the Fed's going their
Uh,
way and that being
yeah,
the bottom.
that's where my latest SaaS obsession came from. Start to sound like Rain Man or something when I just keep repeating it. But again, there's a reason that I was in MTB, and there's a reason I'm like, Roku, Dash, et cetera. That those are a good spot. Those are good stocks to be in when the market wants to go optimistic. So,
Yeah,
yeah, we're
we
definitely
we
there.
were on it. We just didn't know it earlier, but we would say it all wouldn't get up at the same time. But
Yeah,
the sexier ones for the lack of terms, like Nvidia is a great example. Um, it just ain't never came back, and it's not because that's the sexier one. Tesla's kind of there right now too. Those bottoms aren't coming back without some drastic news, but there should be pullback, especially with the big T guy. And
Oh yeah, and we said at the time that the best thing that could have happened with snow was for it to fall on earnings to give our level back, and that's exactly what it did. And now it's kind of in the middle of the zone, but
mhm.
yeah, that's what you want,
The difference
because
between
we're through. Yeah,
the difference between snow and Tesla is that sexy thing I'm talking about. 100% of traders
yep,
know about snow or know about Tesla and Nvidia. 100% of traders know about this. I'm gonna say like 75 to 60 know about snow. It's eyes.
right,
And that's at this point that's what you got to be looking at is the stuff that's real good but it's lesser known because it's still going to
yeah,
give that opportunity for the long term entry. And snow is it. I think CrowdStrike's it too. Um, those are good names. They just don't have
yeah.
a bunch of
Retail
eyes.
only gets in on those at earnings for earnings lottos. I've learned that about it, like MDB especially. It moves big on earnings. People pay attention to it then, and then they're off of it. And I caught a 20-point move on it over 2 days, and just moves really well. So I stay on those for sure.
Definitely. All right. Well, that's a pretty good session. You ready to get to work?
Yeah, let's do it. So I'll take a quick break and